it's Jen Suzuki, and I'm in the industry. I meet some of the greatest leaders out there, dealer execs, dealers, GMs, and I'm bringing them in the studio to talk to me about what's making their business pop, what's accelerating their growth. I'm sharing my own personal strategies for your sales teams, so I'm ready to get after it. Are you? Welcome back, listeners. It's Jen Suzuki on Dealer Talk with Jen Suzuki, and I cannot wait to share my guest with you today. Oh, this guy, right? I mean, he's been in the automotive industry for a long time. I'm going to let him tell a little bit of his background, but we have a mutual client in New York. This is where he's up in the Northeast, but he's also in South Florida, a little Cali vibes in here. But he's very big on mergers. And his name is Dave Cantin. You've probably seen him on CBT News. You've probably seen him in Forbes. You've probably seen him like all over the place. And if you haven't, you're about to hear from him today. He's going to share some insights with us. Welcome, Dave.
Jen, good afternoon. It's great to be here. Thank you for having me on your show today.
Yes, it's such a pleasure.
And thank you for the incredible intro. I couldn't have asked for that to be done any better. That's amazing.
Well, I'm not trying to bring schleps on my show. Hello. Yeah, I'm looking for the people that did something in their life. You know, you're an entrepreneur. You're a guy that, from what I know, you've got a lot more to the story to unpack, I know. But, you know, you had a dealership, small store, brought it into one of the biggest stores in the U.S., and then you transitioned into having a very specialized boutique firm, if you will. That's really focused on very specific companies. But tell me a little bit more about where you're at right now, where you're positioned.
Yeah, no, I appreciate that. Look, the Dave Cantin Group, we've been in business for 8 years, and we are a strategic mergers and acquisitions advisory firm. We represent basically the publicly traded companies, top 150 on all of their acquisitions and divestitures. It's an exciting business to be in, to really help people kind of pass the torch on to the next generation, make sure we're protecting their assets, their legacy, which is most important, right? Being invited to have a seat at that table, even when they're not considering an acquisition or divestiture. We have an incredible nationwide team, big company. We're headquartered out of Rockefeller Plaza in New York City, but we are all over the country. We basically manage all 50 states. And we love what we do. We have an incredible group of great strategic advisors at the Dave Cantin Group, mostly focusing on succession planning and acquisitions. But we have other companies that are tied into the Dave Cantin Group, like Jump IQ, which is the artificial intelligence company that creates Valuations. So excited to have this launched into the industry. It is the first artificial intelligence company in the automotive industry that could create and predict evaluations the way that Jump IQ can. So it's super exciting. You know, the more report, the market outreach report that we launched this past week, which is our mid-year report, which really it's a partnership with Kaiser Associates, and that really provides some incredible insight that we'll talk about today, that dealers and attorneys and CPAs and manufacturers really need to understand, kind of, you know, from a consumer's perspective and the industry's perspective, where the industry is, what's happened over the past 6 months, and what we predict will happen in the future.
Okay, well, I want to hear it. Okay, unleash it. You know, well, so a lot has, let's back it up a little bit. I mean, a lot has transpired in the last several years. My biggest clients in New York have become the biggest dealers in New York through a lot of strategic acquisitions. It's not just New York, but I mean, most of my clients all over the country have become some of the biggest dealers over the last few years. So is it slowing down? I know a lot of these guys are like, whoa, these guys are getting a lot of money now. We're going to let off the brakes. I've noticed some of these guys that acquired stores, they didn't even get them up and running. They pushed them out already. You know, just a lot of things that I've been seeing. But what are you seeing?
Yeah, so we look at it from so many different angles and through different lenses than most, right? So what do we see? Look, March 2020, we go all the way back to the beginning of COVID, where nobody thought this could ever happen, right? Where the industry can never be completely shut down. First and foremost, let's talk about the dealers that we both represent. These are some of the most philanthropic, resilient operators, entrepreneurs that I have ever met in my life. And I'll tell you why. I'll never forget March 2020, having a call with my entire company saying, we're going to shut down everything. We're going to stop everything and provide every single resource that DCG has at its disposal right back to our clients in the industry. Whatever we could assist them with, wherever we could be boots on the ground,
Mm-hmm.
whatever we could do to help them, we're going to now give back and
Mm-hmm.
stop all current business. And we did that.
Mm-hmm.
And we were literally just advising our clients for about 4 to 5 months, helping them through how to become an automotive dealer to a complete shutdown to an essential company, right? To starting back up. And with that goes protecting your employees, protecting your consumers that come through the
Okay.
front door, and understanding the new dynamic of business. Well, who knew months later the industry would skyrocket,
Yeah.
like to a point where nobody ever expected it.
Yeah.
And the greatest part about that was, or I'll say the thing that we talk about the most was how it wasn't predictable. There was no predictability. Nobody was able to guess, is this going to last 30 days? Is this going to last 6 months?
Right.
It just became kind of this perfect storm,
Mm-hmm.
right? Of all of these things that transitioned and happened throughout 2020 to 2023 of limited supply on inventory, OEM chip issues with being able to
Mm-hmm.
supply certain parts to cars. And before you knew it, there weren't enough cars to sell and the price of vehicles skyrocketed. And then
Mm-hmm.
along those ways also came inflation and high interest rates. But what we've noticed was over the past, call it 12 months, we've been able to predict again.
Oh.
Dealers for the first time are able to now understand a little bit more normalcy, a little bit more predictability to
Okay.
be able to really operate their companies. But
Mm-hmm.
dealers that were considering opportunities, and what I mean by that is
Mm-hmm.
there are opportunities that have transacted in the
Mm-hmm.
past 3.5 years
Mm-hmm.
that never would have if it
Mm-hmm.
wasn't for, obviously that COVID anomaly of allowing people to understand, hey, I just made more money in
Mm-hmm.
the past 3.5 years or 2.5 years or 1.5 years, whenever they decided to transact, then I'll probably make in the next 10, 15 years. It's time to exit. Right.
Right.
And it was a perfect time for them.
Yeah. Yeah.
Then there's buyers out there, auto dealers that are next generation or
Mm-hmm.
young operators that believe this is the business they're going to be in for the next 10, 20, 30, 40 years. And they looked at that as an opportunity. And one of the things that's important for the market and industry to know is they didn't look so much at what they were paying for it
Mm-hmm.
than the asset they were buying. See,
Mm-hmm.
when we look at acquisitions, Jen, we don't look at them as brick and mortar buildings,
Mm-hmm.
right? We look at dealerships as an asset.
Mm-hmm.
And it's typically either a short term or a long term asset. And
Okay.
a lot of dealer groups were able to pick up some incredible long term great assets as either tuck in opportunities or new geographic locations of buying large platforms,
Mm-hmm.
just like our friend in New York, who really had the opportunity to grow his business so
Yeah.
much by picking up some incredible brands that he might never have been able to pick up if it wasn't for kind of what happened from 2020 to 2023. So
Mm-hmm.
what we're seeing today, first and foremost, is there
Okay.
is predictability again. We're able to predict what's happening in the market.
Mm-hmm.
It's back, everyone's figuring out that new level of normalcy, kind of what they expect from their business. And it's much needed attention that now operators are giving back to their businesses, right?
Mm-hmm.
When business is booming and you're making more money than you ever did and the bottom line looks really good, you're
Mm-hmm.
not so focused on what your expenses are or how many people you have in the company. Today,
Now.
they're like, okay, let me look at everything, right? Like,
Yeah.
what contracts am I obligated to? Do I have multiple of the same within my business? How many
Yes.
people do I have maybe doing the same job?
Mm-hmm.
And you're now seeing a lot of infrastructure focus
Okay.
within all dealerships, whether they're successful or not so successful. It's allowing the operator to be more engaged and aware of
Mm-hmm.
how that business is operating.
Mm-hmm. Okay, so I've noticed the same thing too. People are tightening up. They're starting to look more at their financial statement and zoom in on every single line item and being more mindful of their costs today. Mm-hmm.
Yeah, you have to be. I mean, so in order to really grow and understand where that growth potential is, even within the four walls of a single car dealership, you really have to understand the whole dynamic of operating that store, and that starts with expense.
Mm-hmm. So, can you give us some advice? Some things that you're telling your clients right now to look for as opportunities or things to tighten up on that will help them to either sell or buy? I mean, give me some intel on the conversations you're having with your clients right now.
Yeah. So look, we represent a lot of sellers that will call us up and say, hey, we're ready to go. We're ready to sell.
Hmm.
And the first thing we do is tell them, slow down, take a deep breath, right? The first thing we want to do is analyze your business
Okay.
because it's our job as we're representing a family, as we're representing an automotive group, public or private, to make sure that we're not just getting what's expected from them, but we're getting what market expects for them to get. So what
Hmm.
I mean by that is they need to properly prepare for a divestiture or an acquisition. And most sellers wake up and they're just like, I'm ready to go, right? Let's
Hmm.
sell.
Okay.
What we do is we do a deep dive of an evaluation and we do our own due diligence. And many times we'll sit with the client, a week or 2 weeks later after completing our evaluation and say, there's so much opportunity in used cars, or there's so much opportunity in fixed operations because of your average repair order hour per
Hmm.
RO, or fine F&I has this much improvement that we could see
Hmm.
based upon our intelligence that we get from Jump IQ. We could see what your direct competitors are doing. We could see what they're doing a mile away. We could see what they're doing 100 miles away, right? Same brand, off brand. And we could create performance metrics
Hmm.
that allows that dealer to say, hey, look, we know you want to sell today. But if you just put 3 months or 6 months into fixing these things, your
Hmm.
enterprise value of your company is going to be worth so much more.
Hmm.
So for us, it's not just about taking the current business to market, it's
Hmm.
helping that seller, right? That auto group prepare their acquisition for the most outstanding enterprise value and outcome as possible.
Yeah, that's excellent. So, you got a lot of stores that you work with, and you're seeing this transpire right now. What are the three areas that would stand out the most to you that you see as running parallel amongst some of these stores that are looking to sell? What are some things that you see that stand out that you're like, these are targets, it seems to be running rampant? Like, this is what we got to tighten up.
Yeah, look, it's easy because we see the same things in almost every store, right?
Sure, me too.
Inventory control, managing your
Hmm.
inventory, right? It's so critical.
Hmm.
I could say for new cars and used cars separately, right?
Hmm.
New car inventory, it's critical to understand your days of inventory, how
Yeah.
many days of cars you have, do you have the
Yeah.
right inventory? What are
Yeah.
you doing with vehicles that are 150 days of age of
Old.
new
Hmm.
that are on your lot that you're paying this incredible floor plan expense on now,
Yeah.
which dealers aren't used to in the last few years
Right.
paying floor plan, right?
Yeah. Yeah.
Now all of a sudden they're paying floor plan interest.
Yeah.
So you got to manage your inventory. It's a huge
Okay.
expense.
Hmm.
Pre-owned vehicles, critical to really understand if that car is not selling in 60 days, it's
Yeah.
probably not selling on your lot. You have to be disciplined.
Yeah.
There's a level of discipline that comes into what we do every day as far as managing an operation of selling cars. And you have to be disciplined. You have to know when it's time to either put it on one of your other new car lots or move it and sell it to a wholesaler, bring it to the auction. You
Hmm.
got to move on from that car. And dealers say the same thing. Well, maybe on day 80 it's going to sell. If it didn't sell in 60,
Right.
it's probably not selling. So
Yes.
those are that's really, I'm going to put those together and say new and used management
Okay.
inventory
Love it.
is one.
Okay.
Number two is really understanding the process of fixed operations, right?
Hmm.
Fixed ops is a huge area of potential earnings. What are you doing with that client when they drive into the service drive? How
Hmm.
much time is the service advisors taking to really get to know
Hmm.
that client, to
Mm.
work with that client, even if it's from their first oil change to
Hmm.
their 12-month or 36-month service, right?
Hmm. Hmm.
It's important that service advisors take their time with those clients, and we tend to quickly see if they are or not based upon their hours or per RO,
Right.
right? And it's really easy to identify that. I know service directors are looking at that, but how many times is the dealer or the owner looking at that compared to the competition? And do they even have the resources to know what they should be doing versus what they are doing? And that's typically an easy fix, just having the right people in place and the right process in place,
Oh
right?
man, you're speaking my language. It's what I do all day. I'm like,
Yeah.
how do we
And
improve the line items? How do we improve loyalty? How do we improve our relationships? And a lot of it is like so simple, Dave. I'm so glad to hear you dial into that because
it's
it's the simplest things that can change that bottom line right now, today.
drastically. Look, if you're not a people person, you're in the wrong business,
Oh my
right?
gosh,
Get up out
please.
of your desk, say
Why
hello
aren't
to
they?
people when
They're
they
not
come into service drive.
salespeople. A lot of times they're not salesmen. They're not making connections with people. They're not remembering. They're not welcoming back. It's like little things that make people feel like special.
Yeah, you got to make people feel good, right? It doesn't matter if they're there for a free oil change or they're
Mm,
there for new tires and brakes. Make them
agreed.
feel as if they're incredibly welcome,
Yeah.
and people, I mean, I walk in service drivers, they don't even want to get out of their desk.
They don't
They're
even
like, oh, yeah,
smile.
move your car down. They don't smile. And
Right,
it
right,
drives
right.
me
They're like, your car?
nuts.
It's over there. I'm like,
It
okay, well, you
drives
gonna
me
walk me
absolutely nuts. Like, do you know
there? I'm
how
with
you
you.
get paid? You get paid for talking to people,
Yeah.
right? So that's
But
number
a lot
two.
of times it's the service director might be dialed into it, but because it's not the next levels being dialing into these small things that add up to it's a point that you're making is your second biggest one that can drive a valuation far higher.
Than you could ever imagine. Let me tell you how
I
easy it
I,
is,
I want
right?
to hear this. I
If
was
I'm
gonna
the
like
if I'm the owner, all
yeah.
you need to do is get a new car schedule, a used car schedule,
Okay.
right? And
Yeah.
look at the days in stock and say, wait, something's wrong, right?
Yeah.
Are we disciplined? All you need to do if you're a dealer or owner is go walk into your service drive. Spend time there. Get there at 7 in the morning when the doors open and
Hmm.
spend 2, 3 hours, and just watch what's going on. It's
Okay.
easy. This isn't like rocket science to fix your
Yeah.
business. Number
Okay.
three, right? And
Yes.
number three is important. And number three is
Hmm.
something that most people haven't done in the past 3.5 years, but they're starting to do it today.
Okay.
Look at your expenses.
Okay.
Understand where you're spending your money, right?
Hmm.
Everyone looks at top line and bottom line. They forget to look in the middle, right?
Hmm.
Here's a great stat. Top line revenues are
Hmm.
up. Top
Hmm.
line gross revenues are not down. Profitability might be down, and I'm going to
Yes.
explain to you why,
Okay.
right? But
Hmm.
gross revenue, top line revenue of most dealers are up right now. Here's a great stat. If your dealership does 150 million top line or above, there's a
Okay.
very good chance you're going to sustain what you've done over the last 2 years, if not enhance it.
Hmm.
If you're below 50 million in top line, there's a good chance you're going to be right at where you were in 19, if not below. And the reason for that huge gap is not just how much top line is above, it's the focus of
Hmm.
your dealership. You could quickly see the difference in between the top line and the bottom line. You have to know every dollar that's going out of your store. Where is it going? And I never believe in cutting into an expense, right? Like, or cutting into a profit. What I believe in is knowing where every dollar that comes in is
Hmm.
going out.
Hmm.
And it's important to understand that sitting with your chief financial officer, sitting with your controller, understanding where the monies are going so you're not wasting money on duplicates of resources that you might have. You'd be surprised. I have dealers that when we do this exercise,
Hmm.
they're like,
Okay.
I didn't know we had four different mechanics or mechanisms to appraise a used car. Like, they had no idea, but each one is $2,200 a month or
Yep.
$1,500 a month. I didn't
Hmm.
know we had two CRMs, or
Hmm.
you start to then dial in and go, wait, we just saved 50,000 a month. And you look
Jeez.
back and say, that's 600,000 a year. Now, if you're doing an enterprise value of that business, it could be 4 or 5 million more to the bottom line
Jeez.
of what you're going to get on an acquisition. It's mind blowing.
Okay. Yeah. Okay, that was a great example on the third point. And just kind of going back to some examples of the first and the second, can you give me some solutions and things that you target and things that you've seen that can help build up a valuation?
Yeah, look, it's as easy as just being engaged, right? So, like, number one, I said with the used cars, you got to look at schedules, right? You got to know what your inventories are, especially with these high interest rates that we're dealing with today with floor plan rates. As far as fixed ops is
Mhm.
concerned, you got to just be in
Well,
your
even
service
well,
department.
go back to the inventory because, like, if I get a grip on my inventory, correlate it to
Oh,
valuation. Just
dollars and
curious.
cents,
Yeah, yeah,
huge.
yeah,
Yeah.
yeah,
Look,
yeah.
when we're
Like,
going
what do
through
you
an
see?
evaluation, I'm going to tell you how much inventory affects an acquisition.
Yes.
There's two areas that it's very important. Number one, I love how engaged you are. Number one,
Because I'm coming out of my seat.
yeah,
I
this
know
is
you can
great.
see
I
me.
love it. No, I love this. You're going to be standing up in a few
I
minutes.
want to make money. I want to see where the money's at. Okay,
I
go ahead.
love it. It's all about the money, right? The bottom line at the end of the day, or the enterprise value. At the end of the day, it's so important to manage your inventory for two reasons when you're in an acquisition. One, a buyer doesn't want to buy 100-day-old inventory on the pre-owned lot.
Of
You're
course
going
not.
to lose a lot of money. So
Mm-hmm.
let's say you have $2 million in used cars on the
Mm-hmm.
books. You
Mm-hmm.
probably only have $1.4 million, $1.5 million. So
Mm-hmm.
now you're going to be taking a $500,000 write-off used car write off to get that acquisition successfully closed. Dealers are not thinking about that when they enter into an acquisition. Number two, you want to have the cleanest new car inventory possible so that you can make sure that you're not paying a huge amount of floor plan interest throughout the cost of that acquisition and the timeline of that acquisition. You also want to have the right inventory, depending upon the geographic location, depending upon the infrastructure. Like EV is a great topic, right? If you're in an infrastructure area in a geographic location, that EV is not selling. Like, let's say your average
Right.
turn is 2 EVs a month, but you
Yeah.
got 35 on the lot. The
Yes.
buyer's going to say, I don't want 35 EVs when you're
Right.
tracking 2 a month. So now you're gonna have to find a way to deal or trade them and swap them and get rid of them and maybe potentially give back, hold back, and all these different areas of monies that you already put to the bottom line. So you got to really manage your inventory to ensure you're setting yourself up for the greatest success. So, those are just three examples, but there's
Great.
many more.
Yeah. Okay, well, I can't wait to hear more, and maybe we'll have to do a part two because I really enjoy talking to you. But can you just switch gears for me real quick? Because I don't want this to go unnoticed because it's a thing that you're really good at and you talk about, but it's about being able to set up a succession plan. What are some things, advice, insights you can share with dealers that are listening when they're and these are things that you're seeing. You're like, okay, how do we not have a game plan? Or how do you go about it? Or what do you think is missing that dealers need to know about when it comes to planning generational wealth?
Yeah, succession planning is critically important, right? Like essential. What we do understand is that half the dealer body, like half the automotive universe in new cars,
Mm-hmm.
do not have a succession plan. And I've been
Half.
involved in way too many catastrophic events where there
Okay.
was no succession plan that everyone involved wishes there was, right? It's
Okay.
unfortunate. But succession planning isn't as hard as you think, right? It's getting a great team surrounding you, great, some great attorneys, great CPAs,
Okay.
great mergers and acquisition specialists. Putting the team around you of dedicated people, I call it your circle of trust, of the
Mm-hmm.
people that you know well, that know you well, that can help you protect your legacy, right?
Mm-hmm.
If they have one dealership or 15 car dealerships, everything should be written down. There should be a process of where the acquisition or where the automotive group grows. Now, everyone thinks succession planning means exit. It doesn't.
No.
We do succession planning for dealers that don't retire for 15 years later, but
Mm-hmm.
there's a path. And sometimes that path, Jen, is
Mm-hmm.
not just exiting, it's acquiring. So part of a succession plan could be, okay, our goal is every year for the next 5 years, we're going to try to add one great opportunity, one tuck in opportunity. We're going to
Excellent.
try to invest this amount of money. And
Mm-hmm.
here's how those assets will be distributed. Here's
Mm-hmm.
how those assets will be protected. Succession planning is critically important. Dealers are so engaged. I said this when we first started about when I was talking about March 2020. They are some of the most dedicated
That's,
entrepreneurs you
yeah.
will ever meet, right? In
Yeah.
the stores, on the ground, they try to know everything that's going on.
Mm-hmm.
These are a group of guys and girls that are really hard workers. The
Yes.
tenacity, the grit that
Oh,
they
yeah.
demonstrate is next level.
Yeah.
The problem is if you remove them from the business
Uh-huh.
overnight, like just remove them from the business, most likely things are going to happen, right?
Yeah.
Business is people are gonna start not understanding who to take direct orders from.
Yes.
It just doesn't go on business as usual. It's unfortunate. But when there's a plan, when everything is written down, this
Yeah.
person becomes this role, that person becomes this role,
Mm-hmm.
when there's a strategic plan and that succession plan is laid out,
Mm-hmm.
you're prepared for anything, the good, the bad, the catastrophic, and anything. And that's nothing more than protecting your legacy. It's like, do you have
Right.
homeowners insurance? Of course.
Right. Of
Do you have
course.
life insurance? Of
Yes.
course. Succession planning is protecting your assets.
Mm-hmm. So I'm a new dealer. I'm within a few years, I should tackle this project when?
Right away. It's
Yeah.
never too early to have a succession plan
Mm-hmm.
because you could grow that succession plan. If you're
Mm-hmm.
starting with one store and you rely on that income and revenue from that one store, it's equally as important to have a succession plan for that one store than it is if you have 30 stores. It's
Sure.
the same thing, if not more.
Yeah. And how often do you recommend that they reevaluate it? Because things change, people change, leadership changes.
Yeah. Just like you do your taxes annually, you look at your succession plan annually, right?
Yeah.
Has your bench changed? Is there different people
Right.
in places? Have you made different C-suite executive moves within your
Hmm.
company? Have you divested of an asset? Have you acquired an asset? Yeah, we always try to revisit a succession plan on an annual basis, and it's nothing more than a conversation.
Is
It's
that it?
getting around the table, it's
Okay.
it's via Zoom or in person, and we just talk. What's the plan? What are you seeing? What's the growth potential? How about for the following year? What are you thinking of doing in 25? What's your goal? Right? Are you thinking of adding more stores? Do you have people that have come up from different positions that you now want to invest behind into other stores? And it's a great few hour conversation that really plans the next year out.
Now, a lot of
Very
people might
important.
say, oh, I do this with my CPA, but what you're saying is maybe we need to have a team that includes a CPA
Correct.
together annually
Well,
to
here's the
run
difference,
through.
Jen. If you're having that conversation with your CPA, if a catastrophic event happens, your CPA is not going to,
Right.
there's no legal, they have no ability to execute off that
Or to
conversation.
reassign positions and blah, blah, blah. Yeah, yeah,
Everything
yeah.
needs to be documented so it
Hmm.
becomes an
Hmm.
executed plan of
Hmm.
attack, and that's the most important part about succession planning.
I hate to even say this, but I've had a few clients that have passed away over the last couple years, big groups. And I don't dig deep into the details, but I always wonder, do they have a plan? What are they going to do? Everybody's panicking in the store. They're like, are they going to sell it? Do I have a job? Who's going to be in charge? It's a lot of things that happen here. So, in thinking about the worst case scenario, what have you seen that could have been done to get ahead of and mitigate some of
I'm going to
this?
give
What do you
you
need to be thinking about?
I'm going to give you a perfect example of one of those experiences, okay? And
Yeah.
then where we learn as we
Hmm.
move through this process,
Yeah.
right?
What can we learn
So
from
there
that?
was a very large dealer who owned a
Hmm.
single point import store,
Hmm.
okay, for 30 years. And he was a pretty engaged operator. He was there 5 6 days a week, 10 12 hours a day, but had a team of about 100 people between sales, service, administrative staff. But his wife, who raised their children, big family, was not so much engaged in the business, right? She really did an incredible job of raising their children, and that was the focus, right? They had a great balance. He ran the business. Well, out of nowhere, catastrophic, passed away. And now all of a sudden, after 30 years,
Hmm.
she had to go into the business,
Hmm.
figure everything out,
Hmm.
trust in her people around her of
Hmm.
what she was hearing was honest, and it wasn't. And it was a mess. And luckily, she called us up. We got involved as quickly as we can. We put the brakes on. We slowed
Hmm.
everything down. We helped go into the store. We helped figure everything out to navigate through some of the greatest hurdles. Who's
Hmm.
running the day to day?
Right.
Whose pay plans are non-negotiable. I mean, the craziest things happen. Like
Okay.
people say, well, I was up for a new pay plan, and I
Right.
was promised by so and so I would get an adjustment. The craziest things could happen. So
Hmm.
when everything is documented,
Hmm.
at that point, a catastrophic event is not something that you need to go in there and figure out the business. You want to take care of your family. You want to be with your loved ones.
Yeah.
You want time to get
Right.
through
You
it.
don't be thinking
The
about all this.
business should run and keep going on. And that's what a great succession plan does. But
Hmm.
also, more or less, it creates instant triggers of different
Hmm.
things that should happen. And it
Hmm.
really helps for that next generation to
Hmm.
understand what that looks like, even if it's just a retirement, right? Where
Sure.
mom or dad are phasing out and the next generation's coming in. It's
Hmm.
great to have those conversations early
Hmm.
on to really discuss, well, who is going to be in charge? How does that dynamic work if there's three siblings or four nieces and nephews that are all involved in the business?
Right.
It's really good to have that all
Yes.
documented.
Yeah.
They made a show on HBO about that. I'm sure you've watched an episode or two called Succession. That's real. So all of those episodes is
Uh-huh.
why a succession plan is critical.
You've given some great advice today, and I love your energy and your passion for the industry and really protecting it, protecting people who work so hard to build these companies and to leave it on for the next generation. And there is a lot of moving parts, and frankly, sometimes you don't know if you're going to sell, sometimes you don't know if you're going to buy, but things start to transform when you have a game plan. You can look at the big picture and say, this is what we want to do, this is where we're going, this is who's going to be in charge. It's a whole thing. It's a whole package here today, and I love that you gave us some real examples, solid examples of what you've seen seeing out there and what can be tackled to increase valuation. Wow. I mean, geez, I didn't know you were so great. Okay. Great speaker, I meant. Just so much fun to talk to. And anyways, please send me your info. I want to put it in the show notes. So if people want to, get some more information, I'm sure you have a lot of content that, is helpful and educational to support some of the conversation that we had today. And I know you have a market report. You might want to share a little about that.
Jen, it's good if everyone goes to davecantongroup.com. On our homepage, you can download the market outreach report, the More report.
Yes.
I'm sure they saw it in the recent Forbes article that we just had the other day, but they could go right to our website, davecantongroup.com. They could download our More report. They could take a look at what Jump IQ is, which is going to make some significant noise in the automotive industry. Again, first artificial intelligence.
Now, is that something dealers subscribe to, or how does that work?
It's something that we're going to be choosing to pick and choose who we're going to be working with. But yes, it is one of the greatest tools to evaluate an acquisition and so much more that's ever been introduced to the industry. It's going to be exciting. But all of that is at davecantongroup.com. And I can't wait to do our next episode together.
Thank you. I can't wait. Yes, again, thank you so much for your time today. You're awesome.
Thank you, Jen. Have a great day. Thank you so much.
You too. You too. If you like these episodes and my sales game techniques, you should snatch up our latest dealer education program I'm hosting. It's called Jen's Remote Classes, and it's a 1-hour, once-a-week class with me alongside other dealerships, all pursuing the same end game to achieve top 10% status in your dealership. For more info, hit me up. All my contact info's in the show notes. I want to hear from you. And follow Dealer Talk with Jen Suzuki right now to get notified when episodes like this one drop. This is Jen on the podcast Dealer Talk with Jen Suzuki. See ya!